This is Martin from Secrets, the channel for learning about trading and investing. Welcome to the daily markets analysis show where we look at how the market performed during the day and also analyze to see how we can better plan for the next day. If you're not subscribed, please subscribe and share to your friends. And this analysis for October 14th, Thursday, and expiry date 2021. And we had another all-time high with the Nifty, literally rocketed to the new all-time high. You can say 1% of move breaking out of the 18,000. Take it away just like that. BANKNIFTY also did the same, but seems to be facing some resistance. Let's see what is that, right? As usual, we will be looking at all of these parameters that you see on the left side on the charts, and additionally we will do the open interest data analysis, volatility and institutional participation data, and sectorial analysis, and global commodities, and we'll wrap up some actionables too, right? So without wasting time, let's get into the action. So the slides ahead would have the screenshot of what we are talking about. So it's a Nifty bullish kicker. It's a pro gap, professional gap, pro gap, Nifty bullish kicker pattern is what you can see, which may have formed a new 18 high. It's 1% of trending up move. This is what a kicker. This is a gap. This is not a window gap. This is a bullish kicker, right? And that's 1%. BANKNIFTY also gapped up. It made a new all-time high. Nifty also made an all-time high, but BANKNIFTY closed red. Because intraday action was M-shape. Intraday action. See, this is neither a spinning top because the wicks are not equal size, nor a hammer but the bull presence can clearly be seen. It's not allowing it to fall down. Wick size indicates that. So it made new all-time high, but then gave up a little bit. In intraday action, you can see that BANKNIFTY, this is what happened. Gapped up, moved down, gapped up, means moved up, and then again gave up. So this neckline is blocking tomorrow. Then we may have some consolidation at a nearby support. That can be up. But look at Nifty, what happened. Intraday 15 minutes time frame, you can see it was gap up, and then that it was maintained till the end, almost till the end, the last up to 2:30, some bit of let's just give it up. That's all. So this is what you see. And both indices, you can see that the Bollinger Band walking has started. So what do you mean by that? Bollinger Band has put an upper, lower, and median. It had taken support from this median or the middle band of 20 moving average, then bounced up, and now it is on the top band. And then the candles are getting formed on the top band. So that is what walking the band. So it's clearly bullish. Trending up is what it indicates. Nifty. Support resistances, if you see, you can see that it have taken out clearly the 18,000 resistance, which is also a Fibonacci projection level. It's taken out, and then it is currently at near to 18,200. So that's a resistance, and above that you have the resistance of 38% Fibonacci extension, which would be 18,350 levels that we have been talking about. Right? Now the supports downside, if the first support would be the pro gap, the window gap. The window itself is the support, and then below that we have 23 Fibonacci support also. So 18,000 is going to be a good support. 17,950 to 18,000, that range. If that breaks, then we have 17,850 is again support where there is some resistance seen earlier, and if that breaks, then you have 600 kind of levels, 650, 600 to 650 level, and if that breaks, you have 17,400, 350 to 450, that range, and then if that breaks, then you have the Fibonacci retracement level of 250 to 300. Right? That's the support and resistance levels for the Nifty. BANKNIFTY right side, you can see that it had made an all-time high, just like Nifty, and we just hit exactly the Fibonacci extension that we had talked about, 38,800, just close to that record resistance and then pull back. Now it has a support at 38,350 down, and then it again has support 38,000, and then 37,800, then 37,400, and then below that 37,000. Right. So these are the supports below, and supports, it's a uncharted for both. Fibonacci projection gives a rough estimate. So BANKNIFTY, there is no the next level to stop, maybe too far away, near to 40, probably above 40k, right? If 39k is but that's going to take some time probably, right? But projection is showing that it's far away. So yeah. So so first thing would be 38,800. So the 39,000 would be conquered or not. That's going to be the major resistance for the Bank Nifty. Plenty of supports, previous swing lows are there down for all the indices, right? So momentum divergence, we have been talking last 3-4 days about on a weekly candle, Bank Nifty and the Nifty has got both momentum reverse divergence, which is bullish in nature and is supposed to bounce it back, and it was work in progress. And that's exactly what happened from the bottom. It met the weekly divergence targets on both indices. Now, if you look at Nifty, as the momentum is intact, Bank Nifty also momentum is on the bullish zones. But you can see that now that the target of the reverse divergence over, now we have a bearish divergence which can pull it back to probably 79.50 levels. So the range is going to be 17.850 to whatever upside 18.350. That range is what you can look at the very near time, right? So bearish divergence is something that you have little questions about now that it is moved. Now there is no longer valid bullish divergence, that is all, right? Trend indications are showing that it is, we talked about this strength is taking a U-turn and then started rising up, right? That's very bullish. So it's a trend. We're talking about momentum now. We're talking about trend indicator on the ADX. So trend is also super bullish on Nifty. Here also you can see that it's rising up. The strength is also rising and the DMI positive is also rising. So absolute excellent trend is what you can see. Now volatility, what happens? It's trying to form the range from between 16 and 90 is what 90 or 20 is what looks like. It had fallen down 17% after going up to 90 previous weeks, but yesterday it did, now it recovered. Whatever yesterday it had given up, right? So 16 seems to be a level. It draws up actually 1.5%. 16.1 is the week's level. So 15.7 is implied volatility, and 33%, 0.5% is the IVP, right? The IVP still may have to rise up a lot before it becomes easy for the option sell. Open interest data analysis, if you see that, this is left in the chart for Nifty and right at the Bank Nifty, you can see that Nifty has 18,000 as the support and 1,700. So 18,000 is probably where markets may end up on an expiry tomorrow. You never know. That means there's going to be a pullback. Bank Nifty, also Nifty in the upper side, resistance is going to be 18,200 and 18,300. So right now it is very close to the 18,200. So we don't know whether it will make the, if it cracks 200, then probably it may be closing. But our interest data is showing that it is going to, this high supports right now, as of now, it is seen at 18,000 higher. So probably that may be the thing. Nifty, you can see the highest put writing is seen at 38,000 and 37,000. So 38,000 is where the game is going to be, right? There again, will it conquer the resistance point at 39,000? That's where it is stuck and then pull back, right? So that will get cleared out, right? But otherwise, put call ratio, if you see both of them, 1.39 and 1.7, all are bullish, but Bank Nifty is more bullish. Put call ratio is, and it is a futures have got a long build up. So IT index, we're getting the next parameter, that's sectoral performance, right? IT index had fallen. It is not gave up. It was a mistake. It moved up actually 1%, right? And that is from a support level of 23 Fibonacci level. But it has slipped the momentum into sideways, so it has to catch up. We'll have to wait for that. Metal closed green 1% up, and the momentum has got to the bull zone. So it is closed 1% up at a resistance zone. So if there is a green above today's close, then that means metal is breaking out again. Otherwise, right, we'll be careful. So I'm talking about the metal index, right? So it's already moved to the bullish zones, but just to be cautious that the resistance is taken out before we pick up the stocks. Auto is breaking out. So already we saw that the other day that it was bullish, 3.4% up to happen. Time to pick. Pharma is consolidating. This is again another small body and momentum is also low, so stay away from pharma. FMCG again recovered back 0.5% up and then momentum is the bullish zones. Looks like time for picking up. So auto, FMCG, and reality again. It closed red today, slightly small body, but it has made big gigantic 35% move before it started correcting a little bit, skewing up. But it is on the top, but it has further room to go up, so it's bullish. So FMCG reality and auto and bullish zones, others are all sideways as if we'll have to wait. Metal is also showing bullishness, but wait and make sure that the resistance is taken off. That's about sector. Look at institutional participation today, 13th October. You can see that the Fyers are back into buying. 937 crores of buying happened after 1, 2, 3, 4, 5, 6, 6, 7, 6. After several days of selling, the Fyers are back into buying more. But domestic institutions are still selling more, and today also they sold some 400 crores. So that's good news that institutions are back into buying. Look at the dollar. You can see that it's at a resistance zone and it is broken out of the channel on a daily time frame, and then this resistance seems to be pretty good resistance. Just formed a hammer pattern on the top, probably a reversal signal where it can cool off a little bit. But momentum trend, everything is bullish on the USD INR currency pair. But the US dollar index currency also is broken out from the previous resistance, but there is another major resistance and which it is attempting to go up, but again that also formed a hammer, which may be indication of a reversal, maybe not confirmed, but it has got tremendous trend and bullishness that's evident. Crude oil was crazy moving till yesterday or day before yesterday to 80 plus levels, and now it has cooled off a little bit. It has gone to the 78, 79 kind of levels, which is good some way, but I don't think it's going to cool off much. Probably it may come to this support region and then again further move up. So dangerous price levels for the crude oil. Along with the US dollar strengthening is not good for our economy. Look at gold. Even when gold is just consolidating, the moment it tries to go up, it is a major support and resistance zone. So it is trying to climb up because it slipped from there, and then that's a zone where it wants to remain until the dollar cools off. Right? That's what you see there with gold. It's not ready to go down, basically. US market is showing some green, and then the Dow Jones is showing some bearishness, not real bearishness. It's opposite of what Nasdaq is doing, down 87. So nothing much clear at this point in time. I'll have to check that European markets and US markets tomorrow morning before the pre-market to get a clue on if there is any global bearishness that's present. Right? There is some kind of job stat or something is coming, so you have to check the news also if there is some. So basically, the charts tomorrow morning will indicate that it has an impact. Now, actionables to India hodls. Is having an inverted. He's having an inverted or a weekly inverted head and shoulder pattern. It has broken out clearly out of the resistance zone, and it is a good bet, right, for a swing. Right side, you can see where you can see that it's a rounding pattern breakout, but remember there is another resistance there. The Ashok planet. Orders are moving, so this may be time for a short swing trade for the Ashok planet. So again, India hodls 2 picks. With a wrap up, mildly bullish in the short term is what my verdict, my view is, right? Now, market view, right? So why it is bullish? Because it's strong bullish momentum and trend, and there is a bullish kicker pro gap. You just can't help but be bullish. Every dip is getting bought. FIs joined again as a buyer after a long period. These are all bullish reasons. Quarterly earnings are yet to come in many companies, right? So that's going to cheer the market further if that's what most people would be. Now, why mildly? Because profit booking can happen because it's at extremely high levels and people will try to book the profit, right? So naturally, we can have corrections can come in. There's still room for more corrections, and higher time from the weekly, you can see there is a live divergence, which is not very much diluted also. So we'll be just careful for some kind of correction to 18,000 that may happen for sure. Mostly, no. So that's why it's bullish, but it's mildly bullish, right? On the short term. The volatility is at a new range. It's trying to form a new range, and it is cooled off from 17% drop from 19 levels, and now it may try to mean revert to that space again. So Vega positive, as I say every day, strategies in the options can work out for swing or push and trades as well. Current spreads and anti-fly strategies can work at this kind of weak levels. I say this is a repetition of every day what I say, but basically the view is what and the reasons for the view is what we may want to look at. Hope this helps you to form your own market view based on some inputs that I thought may be right and may be wrong. It's not a recommendation or anything. You'll have to use your own due diligence to analyze the market, but hope this helps to form that to some extent. Right? If you like it, hit the like button and pass it on to your friends. Thanks for watching and happy trading and happy learning. Bye.